Good afternoon, my name's Ray Hanity. Welcome to another stream. So in today's video, I'm going to be doing a walkthrough of a spreadsheet that I've created that is to help with asset management. So this is the third part in a mini series that I'm doing around an introduction to investing and in particular halal investing. So if you have come across this video for the first time, I recommend check my description to see the previous videos, especially if you're a beginner. There's going to be some terms that I use that you may not understand. So yeah, so quick disclaimer, very important disclaimer, I am not a financial expert or advisor, so don't take anything that I say as financial advice. The intent behind this is it's purely for entertainment purposes, edutainment, as they say. So a bit about my background. I have I did a course in financial planning, but decided not to actually become a financial planner. I just really did it because I love to learn. I love numbers. One of my majors in university is pure mathematics. So I've sort of been studying like finance and just everything to do with that probably for nearly 2 decades. But what I would say my superpower is teaching. I have a background in teaching. So while I guess there might be financial experts out there who know much more than me, but perhaps they speak a language that sounds like Chinese to most people. So what I hope through my videos is to break down more complex financial concepts for the everyday person so that when you do talk to a financial planner or advisor, you're not going in completely blind, but you are coming with a more informed sort of position so that you're not taken advantage of, because unfortunately there is a lot of scammers in this space. So I'm going to dive straight in. So I'll just do a quick share of my screen on a couple of terms I'll be mentioning today that I do discuss, as I mentioned in the previous videos. So we'll start with this. Okay, so in the previous videos, we talked about what is investing, what is an asset. We talked a little bit about why people invest. We discussed different types of investments, such as REITs and ETFs. So these are some things I'm going to make reference to. We also talked about what's different about halal investing. So that's in particular in the first video. But then we discussed creating or working out what your risk profile is, and relating to that, we discuss what are growth assets compared to defensive assets. So again, if I'm speaking Chinese, please check out the description in my video and check out those other 2 videos so you have that foundation, and then come back to this video. So yeah, let's now get into the spreadsheet that I've created that is to help with managing your assets and how to work with it. Give me a moment. Okay, so firstly, we've already talked about investing, and a really important aspect to investing is reducing your risk. So that is why we need to work out what is our risk profile. So in the previous video, I talked about a calculator you can use online where you answer some questions and then it automatically kind of works out based on your answers what your risk profile is. But this is a bit of a summary of what you may find will be the results, and you'll be sitting in one of these. So are you a conservative investor? So especially if, for example, you're retiring soon. So that would mean that you want majority of your assets to be defensive, meaning it doesn't have too much of like a big return, but it's much more stable. And typically that's bonds, which we have briefly touched on in the previous videos. But then you still want some growth assets, which are things that are expected to grow a little bit more, like property and companies. So this is what a conservative investor's portfolio might be. So then as we go down, if you are maybe a bit younger, you are a long-term investor, you've just started working and you really want to invest and grow your wealth for the future, you might sit a little bit further below as a growth investor in terms of your risk profile, where it's going to be completely flipped, where you want only a little bit of your money, 20%, in defensive assets, whereas you would want much more of your assets or money invested in growth assets such as the property and the companies. So there's a little bit of description for each one, but the calculator really does help with kind of working out and honing in where you sit. So yeah, definitely check it out. I'll also add that in the description as well, actually, in terms of working out your risk profile. So once we work out how much of our investment should be defensive compared to growth, so that's where my little spreadsheet comes in. So this is where you can assess everything that you currently own in terms of assets. So you know your money and any money that's already in investments. Where are you currently, and does it align with the risk profile that you're supposed to be at? Because typically when people get into investing, they don't know about this at all. And this is actually something I didn't know about until I studied financial planning. So typically people will hear, oh, there's this company that's really good to invest in, and whatever savings they have, they'll just chuck it in the company and hope and pray. So that can be really risky, especially if it's all your savings in one basket. So that is the whole purpose of this. So this spreadsheet is something that I do sell through my website. So you'll also find that linked in the description. So essentially, what I recommend if you are using this spreadsheet is just make a copy of the main template. Of course, you can re-download it if you have any problems, or email me if you have any issues. But that's just a general rule. Keep the template as is, and I'm just going to go duplicate, make a copy, and then I'm just going to rename it and date it. So today's date is the 8th of November 24. So as for how often would you review your assets, or in other words, how often will you reallocate, where your money is? So what's recommended based on, like, I've read so many books and listened to so many podcasts when it comes to finances and money, just because it's something I'm really passionate about and interested in. So the very minimum would be twice a year, just to keep tabs on how things are going. So more often than not, people would do it quarterly, so every 3 months. However, at the very minimum, I would say twice a year. So as a Muslim investor, I would absolutely make sure I do it zakat time, which I usually will try to align in Ramadan. So, but I try to do it kind of financial years. So like before end of financial year, and then maybe zakat time, depending on where that sort of sits in the year. So that's the first thing. So I'm just going to pop the date here as well. So essentially I will put in the date, and then when I want to do the following review, I typically just duplicate the current values and I just change things around a bit, since I imagine it wouldn't change too much. So let's assume, so these are just some figures I've just put in the template, but I'm just going to assume that we haven't got any investments yet. So we just really only have cash. And we also perhaps have a retirement fund. So in Australia, our retirement funds are called superannuation, or abbreviation is super. So most likely you will already be investing by force because of the government, which is this super system. So part of working out what your I guess, current portfolio involves actually checking your superannuation fund and where is your money actually being invested. And you may want to change some things around based on the rest of the money that you have that we're going to now review and assess. So yeah, so let's assume this is the cash I have, and then this is the superannuation funds that are already invested for me. On that note, I did mention this in the first video where I discussed halal investing, but superannuation funds, if it's a retail fund that's not a Islamic company, so just I'm going to write down actually a couple of Islamic companies, so retirement funds. So Hejaz is one and Salam is another one that I know of. So these are Muslim or Islamic super funds. So the non-Muslim Islamic super funds, just be aware that your money may be invested in things that don't align with your values. So for example, it might be invested in companies that make weapons that kill innocent people somewhere in the world. It may be invested in like pornography, alcohol companies. But even as a Muslim, we also don't believe in interest because of the harms at a greater scale, although there may be benefits to some people. And so a lot of these funds may be invested in banks, like, normal sort of banks that, again, wouldn't align with Islamic values. So if you are in a non-Muslim fund and you want to invest and ensure your money is invested in a halal way, at the very least, you may want to see if you can move your investments into property. Even property can be a bit iffy because it could be a pub, for example, that it's invested in. So that's just something to be aware about. Is the safest thing would be to consider looking at a halal fund. But at the very least, if you want to at least reduce that risk of being invested in things that are not aligned with your values, you may want to consider moving things into property. But the challenge with that, which is what this whole discussion is about, is it increases your risk. It means that you're putting all your eggs in one basket, which is property. And that means that probably with the rest of your money, you may want to try and balance it out according to your risk profile. So let's go back to the risk profile. So I'm going to assume that I am someone that sits in the growth risk profile. So that means the goal for me is I want to be invested 20% in defensive assets and 80% in growth assets. So if I go back to here at the very bottom, that is what this is showing. It is showing desired allocation, and then it's just showing the desired portfolio. So essentially, defensive assets, which you should know by now, are essentially investments that don't grow a lot but are a lot more stable. So it's cash, which doesn't grow at all. In fact, it weakens over time, but also bonds. So bonds, quick recap on what we already discussed. Bonds, an example of bonds is government bonds, which is a little bit like giving our government a loan. So the government pays us kind of like interest on the loan. So this is definitely something as a Muslim that you want to avoid unless they're halal bonds, which do exist and I will be discussing. So essentially, my risk profile I've decided is growth. So that means I want 20% defensive and I want 80% growth. So that's the first thing I'm going to do. I'm going to change desired allocation to be 20%. So that means I need to split the remaining things make sure this adds up to 80%. So you'll see this is the total. So that allows me to kind of play around with the numbers and increase here and there. So let's now look at what these options are when it comes to growth assets. So Australian shares, because I'm an Australian, but if you're overseas, then this would be what your local share sort of is. International shares, property, alternative investments. So alternative investment include things like even your own business. If you have a bit of like a side hustle, I would consider that money invested in something alternative, but also it includes things like crypto. It could even be quite unique things like collectibles, artwork. So if you just happen to be really into that, so that could be something considering investing in. So how does this sit in terms of that risk, scale? So because I'm Australian, the Australian shares would be considered lower risk because I'm in Australia. I get the news, I can get access to the newspapers, that sort of thing. Whereas international shares would be considered higher risk because I don't have as accessible information to the places, or it's just such a huge variety of places. It's hard to keep tabs. Property is considered, for most people, not as high risk as companies, simply because it's a building and people always need buildings. So if you're newer to investing, you may feel more comfortable to put a bit more money in property, but then dabble a little in shares if you're like, I don't trust that as much. But also alternative investments, I think I mentioned, is crypto. So there's nothing wrong with investing in something that's higher risk because it does have the potential of a higher return, but the percent must be very, very minimum. So even in finance books that I've read, they've said, about crypto, a lot of people are like, oh, crypto, like it's so risky, totally avoid it. But even in sort of the more traditional finance books that I've read, they've said that putting, for example, 2% of all your money, so that means in $100, $2 in crypto, that's not a big deal. Like it doesn't mean you're going to be super stressed if the market goes up and down. However, if it goes well and it doubles, triples, which can happen with crypto, you've put that money in. So and as for the whole thing of halal, is crypto halal or not, there are differences of opinion. So there is a camp where, because it's something new and kind of unknown and considered quite risky, there is a camp that believes that it isn't halal, but there is another camp where I suppose when they actually look at how crypto is structured, just how it operates, they actually even argue that crypto is a more halal currency than fiat currency, which is what Australian dollars and US dollars, that's called fiat currency, the normal currencies that we currently use, simply because the government actually controls those currencies and they can make it go stronger and weaker as they please, whereas crypto is based on supply demand. So that's just a little tidbit, but crypto is a whole other topic. If you're interested in it, let me know in the description and I might do another video just on crypto and sort of some things I've learned when it comes to Islam and crypto. So that's just looking at the options. So now let's come up with a desired allocation. So if you were to go to a financial planner, this is what they would do for you. They would work out what is your risk profile, and then they will work out what, ask you, like, how comfortable do you feel about investing in companies? And if you don't feel so comfortable, okay, we'll put a bit more in property, that sort of thing. So I'm going to say I'm pretty comfortable with property just because it makes sense to me, whereas a company can be so varied and I'm not too sure. So I'm going to put a lot more in properties. Let's just say, so 20% is already in cash and bonds. So I'm just going to go, let's say even 50% in property. So then what do we have left? So alternative investments, let's say I don't want too much in alternative investments. So I want to put, say, a little bit in crypto, such as Bitcoin. So then I'm just going to make it 5%, just something much, much less. So between Australian shares and international shares, I might put a little bit more in Australian just because I'm an Australian. So it's less risky, but I'll still put a little bit in international shares. So that's now made up 100. So this is now telling me how much that I need to put for each amount based on the money that I actually have. So this part here is where I'm going to work out, check all my accounts, check my person wallet, assess where I'm at, and essentially how much money I have to work with. So cash, let's just say I've got, check my purse, $100. Let's say one bank account, I check it, it's got, 3,000 is my main bank account. My other one, I keep it for savings, I don't touch it. Let's just say that's got 2,000. Let's say you do a side hustle and your capital that you currently have is 1,000. So with the business, if it's a business, although it's in the cash category, because I'm investing it in my own business, I consider it an alternative investment. So this is just how I do things. So I don't know about the right or wrong, because like I said, I'm not a financial expert on this, but that's just how I treat any money I put in my business. I treat it as this is money that is an investment, and it's higher risk, even though I'm the one in control of it. So I'm just saying, so that's where I would put any business money, I would put it at. So then let's say I've also got a PayPal account. So think of any other accounts you have where you have money sitting and work out what that amount is. And obviously this whole sheet is actually really helpful as a Muslim during zakat time, when you're trying to work out what your zakat is. So then retirement fund. So maybe you haven't looked at your retirement fund for quite a while. So this is the time to do it. Check your retirement fund. And so you're going to see the full amount, but this is a challenge to you. Probably this is going to be the first time you do it. I know it was for me when I first started learning about this, but actually see where is your money invested. And you might be surprised, but you probably have money invested in bonds that are probably not halal bonds, but just work it out, check it out. And so let's say I've already looked at it and I know, according to my little portfolio, they've broken it up into 2,000 in shares, 4,000 in international shares, and then 3,000 in property. So just made that up. So now we're going to look at money that we're going to actually invest. So we worked out, how much money we've got where, we've checked our retirement fund, we've updated that, but we are now considering investing some of our cash into one of these options or a few of these options, but we're going to consider doing it based on our risk profile. So we worked out we're a growth investor. We've put in, that means 20% defensive, and it means this in total, as you can see, is actually, whoops, I think I made a mistake here. That should be 5. So this together should be 80%, and sure enough it is, because the sum of all of these is 100%. So looking at the money I have in cash, which is 5,200, so this is telling me my real percentages currently is 32% is in defensive assets and only 68% is in growth assets. So there's no issues with that if I was someone who was more towards the balanced investor. It's still considered sort of towards growth, but if I actually would like to invest a bit more in things that can grow my money, this is how I use the spreadsheet to do that. So we've worked out that my total money is 5,200. but according to my portfolio, it should actually be 3,250 is what I should be invested in only. So in other words, there's too much in things that aren't growing, and I have some money I can move across to the growth assets. So what do? I go 5,200 minus the desired amount, 3,240. So that gives me 1,960 that I can actually move into these other investment options. So I don't need any more in cash, but I do want to just touch on an example of a halal fund. So in the previous video, I discussed these examples of halal investment funds. So these funds are managed by Islamic financial sort of managers. So they have way more knowledge than me about looking at the companies, what are they invested in, what is their debt. Because as you would know by now from our very first video, that companies that are very high in debt are not halal companies to invest in because it's too risky. So yeah, so basically this is a company by or a fund that is managed by the company Hejaz, which is a halal bond. So if I didn't have too much money in this area, then that's where I would put some money in. However, this at the moment is just cash, which is losing me money. It's not growing at all. But also, especially as a Muslim, we wouldn't typically put it in account and interest. So you might want to move a little bit into here, but keeping in mind it doesn't really change your portfolio. But at least it's growing a little bit more than it currently is just sitting in the bank or under your mattress. So essentially, I know I've got about 2,000 to play with, but that's moving it across to this section here, the shares and property and so forth. But also this gives me a bit of a guide on how I can split the money. So it's a guide at the end of the day. So there's sort of general principles. If you were to, have a financial planner, they would do this for you. But if you're kind of considering looking at it yourself, then treat it as a guide and then, and keep learning, obviously. So looking at this, basically, I want to move across 2,000. And let's say I still want to keep a little bit in the bonds, but I want it to grow rather than keeping it as cash. So let's just say I'm going to go 500 in bonds, and I'm going to remove that from here. So then let's have a look at this. So essentially, according to our super fund, which if it's a retail super fund, you have a little bit less control of how you split your money. So you may want to readjust your percentages because of your super fund. So this is what I sort of consider. Whereas with myself, I actually have moved my money into a self-managed super fund through Stake, which is probably another video that I'll do as well, because they offer the lowest fees when it comes to having a self-managed super fund, and it's just been the most seamless process. So personally, I really love that option, and it just gives me more control of how I can move my money around. But if you're new, just stick to like a halal fund where they do that for you. So so basically looking at this, my current investment in Australian shares is 12%, which is pretty close to 15%. But international shares is actually quite high. It's 25%, whereas this is actually supposed to be only 10%. Property is not much at all. it should be way, way more because that's where I feel sort of safest. I quite like property. So that should actually be 50%, not 20. And finally, maybe because it's my own business, this is a little bit high. But let's say, you know what, I actually don't mind this. So essentially, you can play around with the numbers, or you can strictly move things around and stick to this. So that's what I'll try to do now, but it will involve me moving things around in my actual fund. So essentially, this is telling me this should actually be $8,000, not $3,000. So in other words, I'm probably going to be, and then whereas this one can stay 2,000, that one should be 4,000. Sorry, this one should be about 2,500. That one should be way, way less. So in other words, I can move majority of this. So this should be about 1,500. If I go 1,500 and I make this, so what was that? It was 9,000 minus 6,500. And I add more here. 2,500 plus 3,000. 5,500. So that is looking a lot better. It's a lot closer to my desired, but definitely can put a lot more in properties. So this one is a Hejaz fund that is in international shares. This one is another fund that's also shares. This one is actually property. So this is a REIT, Real Estate Investment Trust, which we discussed in the very first video, and we touched on again in the previous video. So according to this, I still need a lot more in property. I'm at 5,000 currently, but I can probably put that extra couple thousand just in that, simply because I've got my retirement fund already split there. Or I can still split a little bit just to spread my risk. So I could go, you know what, I'm going to go 500 here, 500 here, but then I want to put majority here. So obviously if I add here, we have to take away here. So I'm going to take it away from here. So I've put 1,000 so far. So then we want to put the rest in property. So let's, so it's like 1,000 in property. And make that 1,500. So now what we're seeing is our cash and bonds is equaling 20%, which is our goal. And in fact, our the actual percent of the remaining assets is now 80%. So it's not exactly the percentages that I had popped in, but because I don't really want to touch what I've put for my business, I can actually just change this around. But essentially, I have achieved my goal of 20-80 split when it comes to defensive assets versus growth assets. But yeah, so this is obviously, if you're new, watch this video a few times and watch the rest of my series a few times, because I know for myself personally, the very first time I was learning about this, there were lots of terms that just flew over my head, but because I've just kept reading them or hearing them over and over, it starts to stick, and you'll just grow that confidence when it comes to understanding this. So then if you do speak to a financial advisor, you're just so much more aware and more confident and empowered when it comes to your finances, as opposed to you're completely blind and you're just taking their word for it and you have no idea what's going on. But yeah, I hope that was helpful. So as mentioned, you can get the spreadsheet through my website. So I've got a numbers version for Apple users, and I've got an Excel version for users of Android and other devices. But other than that, thank you for joining me, and until next time, yeah, have a great weekend.